How's it going, everybody? Happy early Thanksgiving, in case I don't get to tell everyone that. So today I was sitting here and I was watching movies, and I took a clip from the movie, The Big Short, and stuff like that. And I was thinking, like, I always wonder, like, what actually makes up the stock market? Like, where, all the money, how's it all play into it? And there's several ways of doing it. So today I'm kind of like just gonna put my thoughts out here on the screen and share the video. So my question that I asked myself was, where does the money in the stock market come from? Pretty much. That's what I asked myself. Okay, and then, I mean, you obviously got basic things, but the stock market, from what I understand, is everything, right? So you got commodities, right? Obviously, shares and stocks. I spelled commodities wrong, whatever. Obviously, the housing market makes a play in it, hence the movie that I just talked about. All kinds of things. I also believe that, like, interest rates, like bets, which you kind of understand what I mean by that in the video clip that I'll play. But like several things like these is what I think make up the stock market, stuff like that. What else feeds this stuff? So like things that feed the market. Fed printing money constantly. Good example. Let's say, what are good ways of doing this? There's one I have in my mind. Oh, what was it called? I can't think of it right now. I'll just get back to it. So I'll just leave that there for that. So these are things that I'm thinking: commodities, shares and stocks. The housing market stuff, which has a lot of bets and stuff in it. Interest rates, same as like for instance, another good one that I've said in other videos, margin. Which has interest that people have to pay, and like interest to me is money that's not actually there, right? Same as bets. The money's not actually there. And, I'll show how I came to this conclusion. So, for instance, if you take a loan on a credit card, right? Cash advance to buy stocks. Now, you actually have to pay the money back, so they're, and like banks and so forth on balance sheets pretty much are putting on those balance sheets, in my opinion, in some areas. Now, I'm not sure you can prove it or whatnot, but in my opinion, that they're counting that interest as what would be income. So they actually do put that on balance sheets. It's called, I forget, like unclaimed. So we just go with unclaimed income. Since I can't think of it. So it's money they expect to get that they put on there, which helps their balance sheet look good, but they don't actually have it. So there's that. Same with margin. When people are paying interest on margin, I think companies use that. So there's money being put into companies, which, in a sense, values up the stocks. And this seems to me in some way, shape, or form, which I haven't figured out how to word it yet or know how, but as money that helps contribute to the market capitalization of the stock market, except that money's not actually there. So you got that, and then I can't believe I can't think of that thing. The checks that they sent out to everybody, in 2020. So 2020 checks from government, or 2019, or whatever you want to put, the free money they gave out. So that was all money that was printed. So it's, well, it was given to people, deposits, and stuff like that. So like they created it. That's the Fed printing money. That money pretty much went into the markets, if you think about it. because consumers went and bought stuff, which raised up the the company's making money. I can't think today. I've been feeling a little out of it, so I can't really think all that well. But it makes the balance sheets look better and so forth. And I think all these things contribute to the stock market, right? And then with the bets, which when you watch the movie, like you see here, I'm going to show you this clip, and it got me thinking, like, when you buy into the markets, this is kind of why I buy low for my swing trades, which still not much action there. I'll show you my positions in this video. It's been 3-4 days since I was able to do it. But, yeah, so I'm thinking, like, this is why I buy low. So I'm going to go ahead and play this clip for you, so that way you can also kind of get the mindset that I'm getting when I look at actual stuff that makes up the market and money that isn't actually there.
What the fuck is a synthetic CDO? Well, here's Dr. Richard Thaler, father of behavioral economics, and Selena Gomez to explain.
Okay, so here's how a synthetic CDO works. Let's say I bet 10 million on a blackjack hand.
10 million because this hand is meant to represent a single mortgage bond. Okay, Selena has a pretty good hand here, showing 18, dealer showing 7. That's a really good hand for Selena. Good odds. In fact, her chances of winning this hand are 87%.
So, my odds are good. I'm on a winning streak. Everybody in this place wants to get in on the action. How could I lose, right?
Now, this is a classic error. In basketball, it's called the hot hand fallacy. A player makes a bunch of shots in a row. People are sure they're going to make the next one. People think whatever's happening now is going to continue to happen into the future. During the real estate boom, markets were going up and up, and people thought they would never go down.
So people who are watching and think that I won't lose will make a side bet. Now this is the first synthetic CDO.
I love Selena Gomez. I bet you 50 million she wins. And I'll give you 3-to-1 odds.
3-to-1 odds? Okay, I'll take that bet. Now, somebody else is going to want to make a bet on the outcome of their
I bet
bet.
you 50 million she wins.
That will lead to synthetic CDO number 2.
Hey, I bet you 200 million that lady in the glasses wins that bet.
She probably will win. So I want a great payoff.
How about 21?
Deal.
And this will go on and on with more and more synthetic CDOs.
And we can transform an original $10 million investment into billions of dollars.
You okay?
Okay, so that's what got me thinking about, times when I enter a stock, if it's long-term, not worried about it. And then companies that I choose. That's why I'm not a big player on Tesla and stuff like that, because I think there's just too many uncertainties in that. And I think there's a lot of hype and a lot of all this other stuff. And to me, it's just not safe, so I don't play it. I mean, if you could figure it out and get in there, at the right times, good for you. But I don't know how to do that as of right now. But you see, she said, I believe 50 million. And then that guy said 200 million. So it seems like the stock market almost plays the same way when you're doing these bets, like, when they shorted all these, CDOs or whatever you want to call them. Which, if you watch that movie, it says they started making stuff like that again in 2015 when that movie came out. And they just called it something else, which doesn't surprise me because it's an easy way for greedy people to try to get stuff rolling. And based on what happened in 2008, all the banks that did all this stuff got bailed out anyway. So that's the other thing, bailouts. But watching that, you take 250 million, and then you add the multipliers that they did, 3-to-1 for the first guy, 10, or he said 20-to-1. And all this money is technically, I guess, if you have banks involved with those bets going into the markets, maybe somehow. Like, again, it's just thoughts I've been having. There's a lot of sorting out I got to do, and I am doing more and more homework. But I just wanted to put this out there. But it's like, and then it even says in that show when people all got it wrong and they came answering for those bets, those 20-to-1s, etc., all this money, it wasn't there. So the stock market, I believe it said in that video, dropped $1.5 trillion. You know, which was in the market. At least the market was showing it was there, but it actually wasn't. All it was word of mouth bets. You know, and then the way the markets jumped up from 2020 up to 2022, I'm thinking like, I was like, no way. That's why, like, you know, I wasn't dumping it into the 401ks because 401ks get tanked, and they exactly did that. You know, I was taking that money out, and I was like, all right, I'll either put it in a bank because it's safer there than an inflated market, especially a market that they said would be fraudulent. You know, which, I mean, if you're adding stuff to a market that's just verbal money and not actually physical printed money or digital money from the Fed, then yeah, that's technically fraudulent. That's like writing a hot check. They can't pay it, you know, so that's a hot check, and that's exactly what the banks did in 2008. You know, so, and that caused the markets to go way up, and then they crash, and then all that stuff happened. There's a lot of movies about it. That's one of them, but there's several movies about that whole situation. You know, but I'm like, wow, you know, so how much, you know, and that makes up the market. This fake money that doesn't even exist makes up the market. And then you add the margin on top of it. And the margin is lent out to traders through trading firms, banks probably, because banks also do some trading, I know, etc., right? So I'm like, wow. So how much of it is, you know, these companies being overvalued, etc., you know, or just bets or whatever, you know, a lot of it people probably can't pay. And we know the banks are going to get bowed out again if it happens again. That's how you keep the economy going, you know, and the rich aren't going to not get rich. You know, so we already know how the play plays. But I'm just like, dude. And that's when you want to find the right time to jump into it. Like, so that's why I buy in low and whatnot. But those are just things I was thinking about. I thought it was pretty wild, you know, considering all of this stuff. Like, just different things. So it's like a lot of that's like the punchline. You know, the money's not actually there. You know, so here's a good thing we can actually look up real quick. Oh, sorry about that. There we go. Let's go Google. All right, how much U.S. currency exists? So it says US 2.10 trillion as of February 10th, 2021. Okay, so we're a little down the line from that. Currency in circulation amounted to 2.10 trillion. The remaining 50 billion in the firm of coins. Okay, so that's physical, right? So let's see if we can find a little bit of information on this. Value of currency in circulation in billions of dollars as of December 31st of each year. Okay, so this is saying 2021. So 2,040,700,000,000 is how I'm reading that, if I'm reading that right. Alright, so not quite, you know, that's actual physical currency that they're talking about there. There's a lot of other money out there, you know, but you know, it's just like, let's go, let's look up, this is just me thinking out loud on the you know, the video, you know. So the Dow today, it's saying market cap 10.35 trillion. You know, that's insane. You know, and all this jump up. How much of that do you honestly think is not just bets with multipliers or margin that a bank might not even be able to, you know, like if people bow out and they can't pay the bank or whatever, and then the bank's like, all right, well, we're going to go under because they manufactured their numbers based on getting paid, or, you know, or at least a lot of other things. But it's just to get you thinking, you know, thinking about it, you know, when to buy in, which company to buy into, so that way you don't lose your hard-earned money while you're trying to make money. You know, but, I mean, all this jumping up like that, I think it's a lot of bets, margins, shorting. You hear people short things all the time. So I think it's kind of a repeat in a way of the 2008 stuff. Does that mean I'm going to go trying to like short housing market because it's going crazy? No. I'm not even I don't even know how to do all that shorting stuff and all that stuff too much. And with what I use, I believe they say you have to open a margin account to short stuff, etc. Yeah, can you possibly make it rich on that? Sure. But me, I'm just I prefer just buying stocks and writing them up. It's not going to make me, rich like people on those movies, but still make me wealthier than I am, and that's what I'm going for. I'm not greedy. But it's just crazy, so that's why it's important to buy into companies when they're low and make sure you know what you're buying into. Okay, so here is my positions as of today. Nothing has really changed. These are still my swing trades. So they're down. I'm still just gonna sit on them. I haven't added any more to these positions as of yet. I might do it. Obviously, it would have to be BSBR or iTub because the other ones are below what I'm allowed to actually add to. I think they have to be like above $3. So I would have to probably sell something just to be able to buy more because the money's not going to clear in the time, especially with the holidays coming up. So that's where I'm sitting at. Not much change there. So 19.6 is the account. And again, I take these safe companies, also like Walgreens, AT&T, like PayPal, okay, for instance. That's one that I still plan to get more into just because, it's way down, so that's a good opportunity. Because I also try to think which companies are actually playing in these, these bets, so to speak, or like people's margin drives it up, etc. Because that, I'm sure, plays a role in the market capitalization of these companies and when investors are buying into them and whatnot. So I think PayPal actually probably is a pretty good golden opportunity given how low it is. And then I also think that Meta, Facebook, that everybody's hating right now, they're just because oh boy, he's getting so much bad publicity. But I think that just means that all that fake money that I was telling you about, all that imagined money just isn't in it right now. So it's showing you the true value of what Meta is worth, in my opinion. So I probably am going to add money to my account, and then I'll probably pick up a few Meta ones and then be able to pick more and more up. I just think that that's really what it is. It's showing you the true value of Meta. And then, whenever they make a change or change direction, which I'm sure they will, I believe that that company is going to go back up and it's going to be a lot of money made there. Okay, I'm not going to say, with all the, Meta's going to be super successful. Probably won't. I don't know. It probably won't even be that great. It could be years where it won't be that great. It might not even work. And it might just change a completely different direction. But the point being is a lot of these companies, like Tesla, for instance, I think there's still a lot of currency in there, and I'm not interested. But I think most of that currency left Meta, showing me the true value, the true opportunity. So that's probably one that I'll get into today. After I make the video, I might actually go on there and put some money into this account and buy Meta because I can, because Meta obviously is not below $3. Amazon, for instance, Amazon I still think has, bets in it, margin, currency that's not actually there, just like stuff that I've been talking about. Is it still a good opportunity to get into Amazon? Sure it is, but I think, Meta might have a better opportunity, plus people are uncertain and afraid of it. So it really just shows you the true value of something. And Amazon, it's just dropped off just because of not meeting numbers or any of that. Numbers are one thing, all right, but that's not something that makes me make crazy rash decisions when it comes to things that I want to invest in. You know, so like some of the more risky things for me is AGNC. You know, it's REITs or housing. You know, so this could be, you know, just way over you know what it's valued at. MFA, you know, I'm up pretty good on MFA. You know, it's exciting to know that I'm up, you know, 21% almost, and that I've gotten paid decent amounts, you know, of money while holding that position, you know, because I was buying into that when it was paying like 21 to 23%, you know, dividend yield. Now it's probably at like, I don't know, 19, 18, 16, whatever, you know, but it's exciting to see that. But, you know, the risk in there, because it's tied to the housing market, you know, in the housing market, they just made new CDOs and all that stuff, you know, in 2015. So that all might tank off, you know, in some time, we don't know. So that's really a risky one. But the risky ones pay off the most. But like I said, I like to stick to some of these swing trade positions because, you know, those are banks. You know, pretty much most of those are all banks. So that's another thing. It's like, and that's why I also stick to companies that have preferably a lot of employees or billions of dollars and whatnot, because even if they do go down or tank something like that, some of them get bailed out by the government. The government's in that area. They don't want the banks to go anywhere. They can't afford that. There's too much restructuring, so they get bailed out. So even if they do, you know, go that bad, they could potentially get bailed out. So yeah, that's where I'm at. I'll probably actually put some Meta in there, and I'll make a video about it tomorrow if I do. And then this is my 401k account. And here, this is just based on what the market does and all that. So that's sad. I mean, this too is it's even risky right now to drop money into a 401k, because, you know, like we look at the I'll show you. Well, here we go. You know, we look at this, you know, and see how high it is still. I mean, it's really is a risky time to be putting money in a 401k still. You know, I kind of think about that. You know, it's gone back up here, these charts. You know, so it's like I'm putting money in there when it's kind of high right now. You know, I was putting it in down here, you know, when it came down. Now the market seems to have gone back up. Show those 5-1. So I did it, not there, but when it was about here, and now it's coming right back up again. So, you know, I might turn around and start putting, you know, just the, you know, I might turn around and change that just to go back to a slower amount instead of putting the 20, well, let's say 30% that I have going into it, because it's going back up. I might turn around and just drop it back down again, just because of how high the market is. So I'll probably do that. So these are some takeaways from this video that I'm going to do. I'm going to probably, well, I guess I'm going to lower my contribution. So I automatically do 6% because I'm matched on that. I'm paying a loan back on that anyway that I borrowed against it. So I'm going to lower that probably just to the 6%, because my loan will put me at, I don't know, 10 or 11% going into it, and put the money back to my account. Yeah, I'm taxed on it. We're fixing to go into a new year anyway, so my bracket will reset. What else? I'm going to add some money to my account, my brokerage. That way I can pick up some Meta, because I think Meta is an opportunity right now, and I'm interested in it. So let's see, Meta, not doing much on that one. All right, so yeah, so how it's setting that, I think Meta is an opportunity. I think majority of all this was just overinflated stuff, bets, etc. You know, whatever. I think people overreacted and they sold off because they want to jump into the bet gambling side, not the actual true value. So, yep, I'm definitely going to get some Meta, and I'm going to switch my contribution back down to 6% because I think the markets are too high, and I don't want to be playing those high cost. I'd rather put them into swing trade stuff or something like that with my private portfolio account. Once I make these changes, I will update y'all. But just to get your mind thinking, you don't want to buy high, so got to make some changes on my end as well. That way we can take advantage of the golden opportunities when they arise. And we need money to take advantage of those opportunities, but there are some out there right now, some diamonds in the rough. So just take a look at them and see what you think. If you guys have any insight or just talking about what the markets are made of and stuff like that, share it with me. I'd like to see some other input on it. But yep, anyway, catch you on the next one, and have a good Thanksgiving. Peace.